Very good morning, good afternoon. Welcome to Financial Source Daily Sentiment Webinar with myself, Giles Cockton. Very good morning to you all. Mark, Osho, hey Regiv, Ryan, good to see you. Suk, TM, hope everybody's doing well. Yeah, morning folks. Okay, right. Another sad day in geopolitics, but we are trying to make sense of it in terms of trading, and that's what we'll be focusing on today. Couple of important things to note, and I just want to run through them with you. We'll get to it. In fact, I want to start with it because it's two important sentiment issues I want to share with you. The first thing I want to share with you is this move in the bond market. Okay, do you notice how bonds are selling off across the board? Now, normally in a risk-off trading, you would see bonds being bought. Now, the reason bonds are being sold in this environment is because investors are looking at this spike in oil prices. Let's just have a look right here. And they're saying, uh-oh, higher inflation is coming. And the reason high inflation is coming is because as oil prices increase, the cost of production, the cost of transportation, virtually everything that's produced or moved needs oil. Higher oil prices means that costs go into everything and they increase across the board. It's inflationary. Now, a number of central banks, what have they been doing? They're starting to signal the end of the inflation story. We're getting inflation back under control. What does geopolitical shock mean? Inflation. So that's what investors are getting spooked about. And that's why we're seeing this move in the bond market. And you can see those US treasuries, right? Now, it's not like full panic stations, but it is an inflationary future being priced in with geopolitical unrest, higher oil prices, yada, yada, yada. Now, of course, this can unwind quickly. And there's the so-called taco trade, isn't there? Trump always chickens out. As quick as the war starts, you could see the war ending. I mean, that's typical with Trump. And he won't like this move in the bond market, and he won't like this drop in US equity futures markets. Now, look at Europe. Do you see how Europe has fallen much more than the US? This is due to energy, essentially. The US, huge producer, the world's largest producer of oil and shale. So higher oil prices is mildly supportive for the US. Not so Europe. Europe and Japan, net importers of oil. So what does that mean? Higher oil prices. So that's why we're seeing a outsized reaction negatively in Europe relative to the US. That's why we're seeing this surge in treasury yields as markets are looking ahead and they're saying inflation, geopolitical unrest, volatility elevated. Now, what benefits from this? The dollar. So dollar strength weighing on the commodities right now. Euro dollar dropping, very sharply. And I've got a target now for the Dixie. I think this can go to the 99.50-100 region. So we'll look at that euro dollar short from yesterday. Did anyone get in on that? It was yeah. Well done, TM. Well done, Mark. Excellent. Yes, I've got a portion still in, and I'm ultimately targeting that 100 region. Right? Yeah. And it's in these kind of environments, like markets, what they do, they price in probabilities. Yeah, nice, Osho, because they can't just come out and you haven't got a guy just sat there, thinking, okay, Iran did this, okay, buy the dollar. Oh, hang on, it's pulled back, sell the dollar. Oh, hang on, buy. You're going to get chopped around. So they look at it in terms of probabilities, and that's what they're looking. Okay, it's a 4 to 5 week conflict. It's going to be higher oil prices. This is going to set central banks back across the world. Couple of things to note. So, what's the sentiment? Dollar strength. What's the thing to be aware of? Higher oil prices. Did anyone get in that? There was an oil trade nearly got in, triggered on a gold trade as well from yesterday. We'll look at that. That's kind of the big picture that we're coming to the markets with. And just remember, it can unwind quickly. Uncertainty, geopolitics, but number one thing right now is dollar strength. So let's now just go and have a little look at the other thing I wanted to share with you is euro pound. Now this is like the impact of the high oil prices versus the impact on the yield spread. So if you look at the yield spread, see the yield spread is trending higher, right? Now here's the issue. I am out my euro pound at break even, and I'll explain why, right? Yes, the interest rate differentials support euro pound upside, but with oil prices being high and elevating and volatile and looking like they're only heading in one direction, it means that the UK and the Eurozone's energy structure comes into play. So the UK has domestic oil production in the North Sea, and not a lot, but oil exports still matter. Production is much lower than historical peaks, but higher oil can improve the UK's trade balance. Now remember, what else is oil? It's inflationary. Who tends to react more to inflationary cost pressures? The Bank of England tends to react more quickly to inflationary cost pressures than the ECB. Do you see what's happening here? Europe, on the other hand, is a net importer of energy, and higher oil worsens their terms of trade. So it also raises production costs for the big manufacturing economies like Germany. So do you see the problem? So if oil prices surge, it's slightly positive impact for the UK and a negative relative impact for the Eurozone. So that means in this crisis, there is a pressure on the euro pound to drop lower, even though the interest rate differential should support it higher. So it might just kind of like chop around, or if this crisis gets worse and the euro pound sort of goes back and starts testing down to those regions. So as a result, with higher inflation likely to worry the Bank of England more than the ECB, didn't quite hit my target 800, so just going to leave it. Right? I'm out at break even, flat on it, fine. But that's why I've changed my bias for the euro pound. So I'm taking that off, but I want to explain the rationale. Okay, so just remember that the UK, around the margins, high oil prices, it marginally supports the UK, but it's really to do with what's going on relative to the Eurozone, and the Eurozone is a net energy importer. So if we also look at the Nikkei, again, Japan is a big net energy importer, right? Is Morning around this morning? No, so we were looking at Bitcoin, weren't we? Looking at the Bitcoin price. So Bitcoin prices, Mark shared a very interesting article yesterday about Bitcoin prices being pressured when oil prices surge, and they are surging, right? So just looking, this structure is still relevant, right? So say we do get a breakdown of that region there, you could try like a relatively small stop, $1,000, looking for a continuation of this flag pattern. It's not really a flag pattern, it's more like a triangle, some kind of consolidation looking like it wants to move lower, right? So just keep an eye on that with Bitcoin. And let's have a look. Yeah, let's look at the Nikkei. You can see how the Nikkei's hit when oil prices go wild, right? And you see Japan is another net energy importer. So high energy prices hit the Japanese index, right? So a couple of things just to look, Europe's hit with high energy prices, Japan's hit with high energy prices, and energy prices are surging. We've got that Strait of Hormuz problem, and Iran, as it were, they really can create indirect trouble for the world, as well as the direct trouble for the world through that Straits of Hormuz. And you can see how foundational that is for world trade, that area. And that inflation problem is just what markets are focused on. So all of this supports the Dixie. So that's what I'm sort of focusing on today. In terms of trades, right? So from yesterday, that euro dollar trade, perfect. That long-term trend line, just testing that, try 2 or 3 times. Got a nice entry here at the 14742 and took something off as we came down to these lows, and I've got the rest of the position and I'm heading for the 1.1. You got support there, but it's just, I think I'm going to try and hold it to the 1.1550. See if you can get down there and see if we can land something there. It could continue to break lower, right? We're breaking through this trend line. There's clearly a change of trend underway, and it's on that geopolitical risk. So 1.550. Let's just look at the implied volatility levels, see if there's anything jumping out at us there. Obvious turning points for us. Yeah, so we've got the 1.553. So because of that, I will just make my target a little bit higher, okay? Just above the 1.550, because you've got that standard deviation, the third one there, okay? So the 1.553. I'll make it the 1.555. Okay, so just 5 points above the 550. So that's the target for the euro dollar. You know, you can see that's potentially, if we do get down to that 5.555 region, that, you know, 36 to 1 risk reward, right? And it just, you know, makes it all worthwhile, right? And it pays for a myriad of sins, right? And it makes up for a lot of losing trades once you get that break on. The other thing, gold. There was a couple of levels yesterday. That standard deviation level, right? Now, that was hit here. So the way to have played this, right, is your 3 entries. Now, if you're 5375 and you're up like 25, 35 points, you take it off and move it to break even. So that should have been a break even trade there. Right, half off and break even trade on gold. Did anyone take that? Brian, did you take that level on gold? Just wondering. And then there was this level here, which I took. No, okay, I took this level down here. I'm going to run through the logic with you. This is called like the bottom of the rising window. And I took that yesterday evening UK my time. Let me just run through the logic with you. And again, decent trade. You've got to run here from 5292 up to 5372 overnight. So what happened here? It's going to take that entry off here. You see that gap there? That's called a rising window. And what I've noticed is the bottom of that rising window is super strong support. So when you have these rising windows like this, and this is one that's worth like noting. When you get a rising window, particularly in the stock market, intraday retracements to that level are very strong, and that's a great area for a hot zone trade, right? Because you could try 2 or 3, 4 times. You can see here, look, you're getting 3 or 4 risk. What was that? 7, 8, 9, 10 to 1 risk reward. Yeah, just note them, Brian. When you get those rising windows like that. And if you can get some like automatic software to just try you in 3 or 4 times, that's what you want. You get a retracement. Do you see how that, even when we went back to that level, it sort of semi-worked again? And it's because these rising windows, and I call it the bottom pane of the rising window. That's your really great area. So rather than trying to trade, you can trade this, and you can see, look, rising window, support, support, support. And it would, it's not going to be illegitimate if you'd gone, okay, I'm going to go on a breakout here, of the long and the rising window, right? That's fine as well. But it's this area here, it's really extended and then it pings higher. So just be aware of that. And conversely, now the opposite is now true. Yeah, that's it. Just keep an eye on it. And the opposite is now true as well. If you get up to this level, then that's potentially suitable for shorts. I'm not shorting this with a geopolitical risk. And you can see gold's choppy, doesn't quite know what to do. Dollar strength, sell off, all geopolitical risk, become bought. So I'm just leaving gold, even though there were some opportunities like yesterday. And oil, I took a little oil long yesterday, just very similar. You see, you got this rising window. We didn't get down to the bottom of it, but we had this region here. If you look at this region, remember what this was? the break of that potential trend line. Again, remember, 1-2 touches, the purists say that's not a trend line, Giles, right? People with experience will say yes, it is, because there's no other price the other side of it. There's just 2 touches, but it's significant. Everyone can see it. That was the potential entry here, right? And just as price came down to this area, right, I took a little oil long because look, this made sense, right? You know that you're retesting that trend line, and I have quite a cheeky stop just the other side of that low, right? And you can see that that's pulling up nicely. Trade earlier in the session did not work out. Remember, we were looking for a 15-minute break and close, and here you got 15-minute break. Look, on balance volume pushing higher, but price closed back in. Legitimate technically, nothing wrong if you took that. Nothing wrong with it at all. Breaking out, looking like it's some kind of flag pattern. Didn't, comes back under. Again, just tight stop, fine. But legitimate, but a trade that didn't work. So that's what we were looking at yesterday. Right, now let's quickly look today, but it's the same themes. Dollar strength. We haven't got much data out. If you look at the calendars, hardly any data, and markets are just completely focusing on what's happening over in Iran and the US. And it's going to be a plethora of announcements going on all day long. And that should support the dollar around the margins. Quick look at the headline for the sentiment. We know the sentiment. It's not hard to work out today, but we'll just take a look if there's anything else to note. Large-scale operations carry on. Europe's down heavily. Williams and Kashkari speaking. UK spring statement. Okay, Iran conflict carrying on. See, there's that thing. ECB's lanes, prolonged war in the Middle East, persistent decline in oil and gas supplies could cause a substantial spike in inflation. You see, that's what people are worried about here. That should all keep the dollar strength supported. So we'll have another look at a potential area for euro dollar shorts. Let me just look. I just want to check out one other thing. I had an interview yesterday with CNBC, and they just caught me out with the move in the Swiss franc yesterday. SNB's chairman saying interest rates are currently appropriate, but can cut rates below zero, but a higher threshold. So the Swissy, right? If you notice, the Swissy yesterday was quite weak. Normally it's a safe haven, but it would be strong. But what happened, I wanted to see what the Swissy's like today. Yeah, it's weak again today. And that's on the SNB Schlegel. Let me have I got that right? Am I making up words here? Hang on. Just lost the headline. Yeah, here we go. Yeah, SNB's chairman Schlegel, it is right. Interest rates are currently appropriate, but can cut rates below zero. So that's what the Swiss franc is weaker. And they can be active in the FX markets. So in other words, they're saying they don't want the Swiss to strengthen anymore, right? And that's what's helping the dollar Swiss franc rise. So dollar Swiss franc upside makes a lot of sense. So we'll have a quick look at that. Very similar trades, euro dollar upside and dollar Swiss franc upside, but we'll just have a little look technically to see where we could get in. Okay, so breaking out of these highs. Right, so that was a trade that could have been put together, right? With the Swiss francs weak, the dollar strong, right, that will do here. So suitable for longs if we get back down to here, right? Just give it a slightly give it a 9-point stop, try up to 3 times from this region here at the 7823. Euro dollar, it's going to be from that swing point there. Try up to 3 times if we get back up to the 672 level. Okay, that's your regions. And ultimately targeting that 550, 555. Oil can continue to be chased, right? But again, you want to look for some kind of pullback consolidation and then going higher. So you're looking for this another kind of flag pattern to form. So moving up, consolidation, then breakout, go with the same kind of, like this kind of pattern. If you get this kind of pattern again, go with that again. All right, folks, calendar's very light. It's going to be geopolitical risk and or dollar strength. The dollar against the Swiss franc makes a lot of sense, and euro dollar shorts makes sense. Careful of gold. Oil's going to be volatile, and watch out for headlines. Yeah, absolutely. Indices are selling off on the geopolitical risk. High inflation means higher interest rates, TM. So the big move in bond yields is being felt in US equity markets. The spiking high in oil prices is being faced by European equity indices as well. So now all investors are saying, oh, hang on, the central banks around the world which are cutting interest rates, if there's a surge in inflation through energy shock, remember what happened in Europe, TM, with the energy shock due to the Russia-Ukraine crisis, it means central banks have to keep interest rates higher for longer. Right? That's what equity markets are really getting freaked about. Because what they've been looking at, oh, the Fed's going to be cutting, the Bank of England's going to be cutting, the ECB don't need to do anything. Well, the RBA last night was saying their next move is a hike, right? And that's more pressure for them now with oil prices higher. So that's what's going on. And look at volatility. And it's all come from the bond market, where the bond market says, oh, this energy spike is inflationary. Central banks will have to change their outlook. That means higher interest rates, worse business conditions, sell equities. That's what's going on. And if you look at the DAX, you see the DAX is doing worse than anyone. Germany, big manufacturing base, the the engine, the workroom of Europe. So they are down currently 3.5%. So anytime equity markets are down 1%, pay attention. If they're down 3.5%, that is significant distress. So there is distress going on, and it's an inflationary shock. Any much falls, you'll get Trump. I could see him just reversing and hammering as hard as he can, trying to get the job done as quickly as he can. He will not like this for the economy. So kind of the worse it gets, potentially the better it gets. Do you know what I mean? Like, that's just my opinion, and we have to see, and that can definitely be wrong. So we'll just have to see what happens. Tim, is that okay? Yeah, and so again, it's like looking for like obvious areas, like for trading, like for the ES, what you'd be looking for is obvious, like sticking out trend lines, like this kind of thing, You see that little, like you're looking for shorts from this kind of region, that kind of thing. Time price opportunity, using time price opportunity. You see, it would be like here. See, there's the value area low, but is it for the week? Let's just have a look. Yeah, it's for the week. So point of control, anything up to here, that value area low, look, it's trying to just break out the value area low from this week. So we are trying to move lower as it speaks, as I speak. And that little zone here, right, that will be like a hot zone. So that will be okay intraday to be looking at. So again, folks, if you want to keep your eye on what markets are worried about, just keep your eye on the bond market. If the bond market keeps selling off, in other words, yields keep going up like this, right? This is saying inflationary spike, but that supports our dollar play, TM. So the higher this goes, the better that is for the euro dollar shorts. Until tomorrow, folks, been a pleasure. Thanks, everyone. Take care. Yeah, got it. Well done, TM. See you tomorrow, guys. Bye for now.